Good evening. I'm a little bit annoyed because Chris kind of nicked my line about David Cameron being here just last week. So obviously we only have the very best of speakers sitting on this particular spot, and we feel the hand of history on us as we talk about the developments in financial services and financial technology here at this conference. So this is part two, basically, of this evening's activities of the CEO agenda. This panel debate entitled Welcome to the FinTech Revolution. So welcome to all of you. And joining me, I'm going to ask our panelists to come up onto the stage one by one. So first of all, we've got Chris, who's sat over there. You've just heard from him, so he literally doesn't need an introduction. So I'm not going to give him one because you already have it. Next, we've got Debu Pakasta. He's the New Business Development Principal at Google. He's an operator and a deal maker, spearheading the acquisitions of Beat That Quote and ITA Software, to name but two. And in a previous life, he helped sell lastminute.com to Sabre. So thanks for joining us this evening, Debu. Next up, we've got Will Jones. He's the Managing Director for Monitise in Europe, the Middle East and Africa. Monitise helps bring banking into the smartphone era. They've got 300 banks as their clients around the world as customers. And if you're wondering where the chief executive of Monitise is, because he was originally listed as speaking here, he had to jump on a plane to the States. So perhaps there'll be up to 301 clients when he comes back. Next, we've got John Conlon. He's of Barclaycard. He's one of their top people in the digital payment systems arena. He helped bring us mobile contactless together with Orange, and he's now working on a range of mobile payment propositions. We're going to try and get him to tell us about some of them, but some of them he presumably won't be telling us for reasons of trade secrets. Now, at Barclaycard, he almost overlapped with our final panelist, which is James Lebrock, but James actually left a little bit before then. James left Barclaycard in 2010, is it? To become 2006, I beg your pardon, to become the managing director of O2 Money, which allows the network's 22 million subscribers to pay for things on their mobile phone without having to get their wallet out. So if you'd like to welcome our panelists, and we'll get the discussion going. So, I mean, I suppose we should start off from where Chris left it, really, which is about mobile being an irrelevance and it all being about the data, if I understood you correctly. Now, I mean, right now, I mean, is this really... I remember when I was 13 years old, I was going out with a girl, and she was a brossette, and they didn't last very long, brossettes. Is this really just a teenage crush that we've got on mobile financial technology developments that are going on right now? Is Chris right in terms of it all being about the data and mobile just being, I don't know, like a bit of a fad? Deb, if we start with you.
Sure. Mic on. Yeah. So I partially agree, and I'd say partially for a different reason. I've seen what M-Pesa does, and in fact, last time when I was in Kenya, it's probably, when you see the mobile use case, and I'll define mobile as a use case at first, and that's where the power lies. You see what M-Pesa is doing to Kenya itself. You know, people pay their rents on M-Pesa. It's something I've never seen anywhere else. You can actually pay your rent. And I didn't believe it. So I had one of my colleagues saying, you know, do you want me to show you how it works? And he actually took out his phone and he paid his month's rent while we were talking. Wouldn't a lot of us like it? Coming back to mobile, it's the fundamental use case that makes it very powerful. It's even more powerful in countries where, you know, landline telephony is increasingly relevant. And I come out of India. India, the growth of mobile has basically meant a lot of people don't own landlines, in effect. So the use case becomes more powerful as that grows. Mobile also becomes very useful when you're thinking about agriculture, for obvious reasons. India, Indonesia, very good use cases where financial information that's getting disseminated through mobile, which is a use case, becomes very powerful. Where I also agree is that, and this is Chris's, I think, broad point, data. Data is fundamentally where the game is being played. Mobile is a use case on which data is getting disseminated. And so I agree from that particular perspective, which is correct. And you've got to look at both together, but the use case is important, because if you don't have a use case, then consumer adoption becomes a problem. We all adopt something that we know that we are using. The use case has to be relevant. If it's relevant, then it goes viral. If it goes viral, there's a real business case that builds on top of it.
So I suppose right now, obviously, mobile is what we're using rather than tapping onto a wall or using our shoelaces, or our shoelaces automatically buying a replacement for themselves, whatever they might do. I mean, Will, where do you see things going from here?
I think to me the most important thing we're seeing right out in the market now is what consumers are actually doing with mobile. It would probably, in many ways, if you had a consumer panel here of 200-300 people, you'd get an interesting perspective. But what we're saying is, if you present the consumer with something which is very easy to access and use, is secure, and has trust around it as well in respect of the brand offering the proposition, consumers flock to it. I was telling, I think, one of my colleagues here earlier that this reminds me, looking back to 1997 and the internet revolution just kicking in, this is like internet on steroids. It's actually absolutely going at a pace and a speed which has been not seen by banks before. A completely kind of different behavior as people are no longer having to think about money management in the respect of I need to put 2 hours to one side and I'll never do it. They're actually snacking on their money management. They're actually looking at it for 5-10 minutes in the morning at 6:30, the new peaks that actually come in as they travel into work on the train. This is kind of the power of mobile and the engagement that mobile is actually having. Engagement levels of a good banking application are 5-6 times greater than internet usage, and that's very, very powerful.
And John, do you see this as an opportunity or a threat for someone like Barclaycard, which has obviously been around for many years, which perhaps some people might see as an old form of payments, kind of trying to get to grips with the new?
It's a huge opportunity. So I think to the point of the Internet of Things, love the concept, and I think we'll get there. I'm kind of more in the kind of where how people live their lives today. So mobility is more important than mobile. So the fact that it's about a device, it's about that people can do what they want where they want. So we live in an on-demand lifestyle. We want things that we want. We want to consume media or consume content or consume information or banking information, whatever it might be. For a business like Barclaycard, if we don't embrace it, then we'll be left behind. We're very real to that fact that people use mobility to live their lives. They expect to be able to get access to information securely when they want and where they want it. So from an opportunity perspective, it's a huge opportunity for us. And we've already launched a few mobile services, and there's great feedback on that. The ask is more. Consumers are asking for more. And they want to be able to get it where they want it, as opposed to us pushing it to them.
And I suppose in a few years' time, if plastic becomes a thing of the past, you'll just change your name to Barclay Chip or Barclay something in the air or something or other. Yeah. I mean, James, you used to work at Barclaycard. You're now at O2. I mean, a few years ago, I mean, mobile phones were just for making calls. They were just for texting. Okay, they would go on. I mean, now you're moving kind of onto Barclaycard's territory. You're moving into kind of banks' territory as well, in a way. Are you all helping each other to kind of develop this? Is this a turf war, or is now just the calm before the storm? How's this going to play out?
My view is that we're right at the beginning, and so what we're seeing is lots and lots of activity from all sorts of different players that over time will learn the lesson that collaboration is really important. We'll learn the lesson that alliances and partnerships with the right organisations are the way actually to achieve success. So people comment on a war of wallets. I think it's not a war of wallets at the moment. There's just a proliferation of different opportunities. Chris talked about the fact that it's not about mobile. It's about connectivity, actually. And I think the Internet of Things is about connectivity, connecting people with the things and the experiences that they want to have. And that's what I'd say we try to do. So I'm not trying to put my tank on John's lawn. I'm actually trying to connect our customers with the things they want to do.
Of course, once Google Wallet comes over here to Europe, perhaps there'll be more than 1 or 2 tanks on the lawns over here. I know Deborah was waiting for someone to ask when it's coming to Europe, so I'll just get it out of the way now. Can you tell us when Google Wallet's coming here to Europe?
So as of now, we are concentrating with Google Wallet in the US. That's fundamentally the market that we're spending a lot of our time and energy on. We want to make sure that the product is developed into a more robust version out there as we go through this. Obviously, Europe is an obvious market, given the nature of how it's federated today, and I use the word federated specifically. But for the time being, what we're doing is we're getting the product fine-tuned in the US, and then in due course, it comes out in Europe.
And Chris, you were talking about this bank, that Fido Bank, was that right? Fido. That because you were saying relating to the trust that perhaps people have lost in traditional banks. I mean, we're seeing a lot of disruption from, I suppose Google's like an established player, so like Barclaycard's an established player in their own particular markets, moving in more and more into this fintech arena. But are they going to be seen as kind of dinosaurs, if you like, when the likes of Fido and others come along and completely disrupt the whole financial system themselves?
I suppose some already are, that Google is the incumbent, Facebook is the upstart, but Facebook's now the incumbent. There'll be something else very soon that will be the upstart. PayPal was the innovator, but now they're the incumbent because Square is the upstart. But Square as an upstart is already becoming an incumbent, so there'll be something else downstream. Right. And I think reflecting on what the panelists' response to the mobile is dead discussion, or mobile is not the focal point, it's the connectivity, which is absolutely right. It's to do with, I've spent all my life looking at technology that's coming downstream, and by the time it arrives, I'm actually bored with it because I've been dealing with it for so long. So I've been dealing with mobile since about 1995, 96, where we were doing mobile payments, WAP-based banking, all that sort of stuff. And so it's taken a long time to get mainstream, but then when it does become mainstream, we all go, where did that come from? A bit like the iPod when that became mainstream. Where did that come from? Well, it was pretty obvious that it was coming because there were MP3 players, but I remember going into a store called Dixon's, which some of you may remember, in 2003 and said, I would like an MP3 player. And they said, we don't stock those anymore, we used to. And I said, well, why don't you stock them? They said, because people don't download music off the internet, it's too slow. And they didn't see the revolution coming. Obviously, now we all see it. A bit like the iPhone when it came out. It's absolutely obvious now, but it takes the innovator to bring the technologies together and make them mainstream before we say that is so blindingly obvious. And right now, what's blindingly obvious to me is that we will move very rapidly from the mobile focal point to this connectivity point. If you look at the CES show this year, the Consumer Electronics Show, one of the most exciting products to me that came out of it was a light bulb. Yeah, you saw it. A light bulb that basically is a wireless Wi-Fi speaker system with surround sound 5.1, or 5.2 rather. So it's just a normal light bulb, but it's on a Wi-Fi Bluetooth connectivity into your sound system or into your TV, which to me means I move away from wired speakers into wireless everywhere through the house. It's pretty boring stuff, but that's the Internet of Things coming to life. That is, as we're starting to see it coming through. And as we see it coming through, suddenly we'll see mainstream products within 5 years and we go, where did that come from? And that's why I focus on that, because I'd rather be positioning for 5 years from now rather than launching a mobile service for 2014 and finding it's completely irrelevant.
I should say that to all of our guests here today, if any of you got any questions, we'll be opening up to the floor in a few minutes. So when you've got a question, just put your hand up and say who you are, and someone's going to be roving around with a couple of microphones. But just moving on from that, Chris and I, just marvellous vision of someone having to change that light bulb. I'm not quite sure kind of if it gets hot or what happens, or if it's a particularly expensive light bulb to change. But in terms of I mean, again, just going back to your point about this new bank, I mean, we've got representatives from who have banks as their customers, or who work for banks themselves. I mean, in a few years' time, are we going to just see the likes of Market Invoice or Funding Circle? I mean, are banks actually going to be needed in a few years' time?
Yes.
When you can already get your money from these kind of social funding places, which, again, a few years ago just didn't exist. Debbie?
So let me answer that in a very different way. So I'm going to throw some names, and I'm not going to explain what these companies do, but at your leisure, just search them, and you'll get a sense of what people are playing around in this particular space. Ironically, a lot of them are actually non-European. So, but another bank, Move-In Bank, if you have a look, very interesting what they're trying to achieve. Finance a car, very different business model, but trying to achieve something else. You look at people like eToro, social investing, which is basically a lot of people talk about that. You look at Currency Cloud, one of the fundamental big businesses that there is, the one that is almost ready to be taken over at a pure technological level.
By Google, maybe?
No, I mean, it's not, it's a completely different business. It's much more for banking business. Blue Leaf. These are players who are fundamentally innovating in this particular space. When you look at what they're trying to do, they're taking highly established businesses and trying to turn them around. They're doing it in a very small, but as Chris will explain, they're trying to go at the core of what the value proposition is, and then trying to turn that around from the user's perspective. Because in the financial services sector, what's typically happened is, you've been told, you've been given something, and you've then gone and consumed that. What if I start demanding the other way around? I tell you what product I want, and I then accordingly have a product that's been created for me, and then that scales up. Ultimately, our needs from a financial service, and I'm going to stick to financial services for the time being, our needs are not that different. However, our use cases and our timings are very, very different. And that's where a lot of the games will play. Now, are banks going to remain? I think for the near future, absolutely. Because, and for various reasons, without going into, but regulation obviously is one, but also use cases are there. What a bank will look like is a different issue.
I suppose the other issue, Will, is of course that they might not show it necessarily on the outside, but they're pretty technologically advanced in a lot of cases. I mean, I was chatting to you on the phone earlier and say I just stumbled upon the fact that I could check my balance with HSBC on my smartphone. They never told me that I could do that. Why they hide? They're obviously capable of doing a lot more than they're actually doing. Yeah. I mean, are they in the vanguard of technology, or are they going to find themselves in the place where perhaps Dixon's found themselves, or Comet or HMV, to use more extreme examples?
I think that's a great point. It all comes down to how quickly are they moving and whether they're actually being visionary in the space. So, HSBC is an example. I think a very good example is what RBS and NatWest have done as well. They, publicly known, they have 2.7 million customers now using mobile as an exclusive relationship with the banks. That's 20% of their retail customer base in the UK is choosing and electing to make mobile their mechanism for interfacing with their bank. And that's probably over an 18-month period. It's grown to that level. Now, why is that? I think, A, it shows that actually you don't have to have necessarily a brand new brand or a brand new bank. In that case, a bank who obviously, like many banks, had challenges in 2008, who've actually got the vision to actually rebound in a different way, structured their business in a way which allowed them to move quickly, and actually then gave the customer what they want. And I think the question around will the banks be around in X years' time will largely come down to what does the consumer want, where will the consumer be happy to mandate their monthly salary, and which relationships will they trust be secure enough and are willing to give them what they want as well quickly enough to do that.
And again, of course, that comes down to trust. I mean, John, banks, I remember actually reading that the bankers, politicians and journalists are equally reviled in this country. So it's nice to be sharing the pain with some people here. But talking seriously for a moment, as a bank, you have the trust in the sense that people are used to having their salary deposited there. They're used to using you to look after their most important assets. But can it also be a liability in that I'm not going to use Barclays as a specific example, but that banks aren't necessarily everyone's favourite institution, and perhaps this is something else that is holding back banks' potential in this arena?
Well, I think that the potential is held back if there's complacency. So there's a realisation that, certainly in Barclaycard, that our competitors in 3 years, 2 years, 3 and 5 years' time aren't the same competitors as we faced the last 10 years. So as a payments business, they have many more competitors who enter the fray because it's easier to enter. And to Will's point, consumers will demand what and take on services that they choose. So it could be that O2 Money might finance my part of my wallet if I want to, as opposed to just assuming it's a bank. So complacency could put a bank out of that space. So I think what we're focusing on is trying to understand how the payment instrument plays a part in consumers' lives. And payments, if we're very honest, payments isn't that interesting. It just has to work. A customer wants it to work, to be trusted, and just to happen. So if we focus on payments, we won't win in this wallet space. So I think the complacency moves away if you create a service that people actually genuinely want to use, and it covers more than just the payment aspect. So the point around this war of wallets, again, I don't agree that it's a war, but I think what will come down to the winning services will be those that offer more than just a payment opportunity. So complacency and choice really come to it.
And James, I mean, is this, for O2 Money, I mean, is that people, I suppose people will be happy to, buy whatever they want, their newspaper or, maybe a CD if there's a shop that's still open selling CDs. But they're probably not going to use O2 Money to maybe buy a car or, to put a deposit down on a house.
I don't see why not. I don't think they will in the next few weeks. But I think the point, and building on John's comment, I don't wake up in the morning wanting to make a payment. I don't wake up in the morning wanting to borrow money to buy a house, to buy a car. I don't wake up in the morning thinking that's the very best savings rate. financial services products, and I've been a banker for 26 years, so I can make some of the comments I'm about to make. They're about a derived demand. The truth is that I want to buy a house, and I might need finance. I want to buy my sandwich, and I need a means to pay for it. But that doesn't have to have anything to do with a traditional bank. So I think what's happening with innovation these days is that it's a much more accessible opportunity, and it's a much more sophisticated opportunity. And so the organisations Debu listed are organisations that are looking, to use his term, at the use case. They're looking at what it is the consumer wants to do, and they're reinventing the way in which it's done. I mean, the list it's endless, isn't it? Borrow, Wonga, I mean, it just continues. So I think banks have got to find a way of innovating differently that presents the services they can offer to the consumers in a way that solves the consumer's problem or desire in a much easier, friendlier, accessible way.
And Chris, I wasn't a particular fan of Star Trek myself, but I think we used to talk about there being life but not as we know it. Are we going to have banks but not as we know them right now? Is that how it's going to be?
Well, it's a number of things that will interplay into this discussion because back in the day, I always remember when in 1996 Virgin announced they're getting into banking, Tesco, Sainsbury were getting into banking, and everyone thought that Microsoft would get into banking. And 15 years later, Tesco's still trying to get into banking. Virgin has just about got into banking through rebranding another bank. And part of that is the challenge of getting into banking. It's the core of banking itself, which is if you're opening a bank, particularly in Britain or Europe, you have to back it with £100,000 of guarantee per person who's banking with you. That means if you get 1,000 customers, you've got to have £100 million of capital that you can prove you have, and if you get 2,000 customers, 200 million and upwards. So that's a big challenge. There's a huge vetting process to get a banking license about your board of directors and who's on that board, because banks are meant to be safe, and we've gone through a time where they haven't been, but the whole regulatory regime means that most companies don't get into the core of banking because it's just not worth it. They'd rather ride on the above the banking space, which is what PayPal do. But there are a number of people now coming in who are doing different business models. I know Moba very well, but people like Zopa who are here this evening, Funding Circle's been mentioned, Kickstarter, even LinkedIn, to get crowdfunding. There's lots of other ways to crowdfund, to source investment to save. There's a great company in the States called SmartyPig, social saving. But it's on the periphery, it's not at the core. And so the second thing that comes in is that even if you get a license to do banking in the UK or America or anywhere else, at the core, then you take deposits. And you have another problem then, which is that basically you've got to be able to run those accounts in the UK in particular for free.
At the moment?
At the moment. So the only way you can make any money on those accounts is to charge people fees on defaults or on other services. And for anyone who wants to get into banking, therefore, you have this hurdle of all the cash capital investment you've got to build up to get into the core of banking. Then you get into the core of banking, there's no money there. So that's the reason why 16 years since Virgin, Tesco, and others, Microsoft, have been rumoured to come into banking. They haven't, because it's not worth it.
I suppose there's also obviously all the regulatory questions about, people getting into this arena to be regulated to make sure that they can be trusted. I want to open up to the floor if anyone's got a question.